Hey, what's up, guys? John here. The nearly $2 billion class action lawsuit against the National Association of Realtors is now spreading to New York. It's in Texas. This is going to be a national disruption impacting 1.6 million realtors.
Now to the class action ruling that could change the way Americans buy and sell homes.
Federal jury in Missouri ruled the National Association of Realtors conspired to keep home sale commissions artificially high.
The ruling means the National Association of Realtors are liable for nearly $2 billion in damages.
Not to mention that now some banks are moving away from even working with mortgage brokers. Citizens Bank now has canceled, as of December 6th, any relationship paying any fee to any type of mortgage broker. When you look at what's happening, we're in the beginning of massive disruption inside of the real estate industry. And in this video, I'm going to break it down for you to show you exactly what's going on. Please hit the like button. When you hit the like button, YouTube will share this content to educate other people about what's really happening in America. And if you want to fix your credit to position yourself for what I believe is going to be the greatest wealth transfer of all time, go to GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. The better off your credit score is, the cleaner your report is, your credit report. When you apply for new relationships, credit cards, home loans, auto loans, the easier it's going to be for you to open these doors. And I believe we're going to walk into an opportunity where you're going to be able to buy deals and pick up opportunities for pennies on the dollar. But you're going to want to be positioned where you can get these doors open to get access to money. So if you need help fixing your credit, we'd love to help you. Take a look at this. So Citizens Bank to exit wholesale channel. After careful consideration, Citizens made a difficult decision today to discontinue originations in the mortgage wholesale channel. What does that mean? Well, a wholesale mortgage lender is a bank or other lending institution that funds and sometimes services mortgage loans, but uses independent mortgage brokers for the initial interaction with the client, including the application. They're getting rid of the entire equation with mortgage brokers. All broker submissions received after December 6th will not be processed, the letter states. The bank added that it will continue servicing all existing mortgages in accordance with its customers' existing processes. So when you look at what they're doing here, it's very simple. They're deepening the customer relationships. They're only working with their own customers, and they're pushing for tech, a big tech push this year. That's why you want as many relationships as possible with banks and financial institutions going forward, because you don't know which ones are going to tighten up more than others. You don't know which banks are going to go down. You have no idea what's going to happen, right? So the more options, the better. So in 2018, Citizens purchased Franklin American Mortgage Company. Now they combined control 200,000 servicing households. And it's a top 15 bank-owned residential mortgage servicing and origination platform. I mean, they're huge. They're absolutely huge. But this is kind of reminiscent what happened in 2008, right as the great financial crisis was getting started. Well, Covia said, hey, starting Friday, the company will no longer offer mortgages through brokers. This is July 22nd, 2008. So what are we going to see here? We're going to walk into this massive disruption, and the National Association of Realtors is the first domino to fall. They say the 6% real estate commission is doomed. I think the entire real estate industry is in very, very big trouble, because right now, there's about 1,566,000 real estate agents in America. In the great financial crisis, about 1 million, right? So the last couple years, hundreds of thousands of people decided to become realtors because it was just so easy. You would pass your test in 6 weeks, hang your license at a Coldwell Banker or Keller Williams, you pay your E&O insurance, and then you're off to the races. Make $100,000, $200,000 the first year, right? This was not normal. Normal is, you become a real estate agent, you don't make any money for the first year, maybe you make a little bit in the second year, then you start to make some real money in your third, fourth, and fifth year after you've really developed a knowledge base and you could really supply value to a home buyer and home seller. And you were working really, really hard to kind of formulate those relationships. But now, that easy money, it's gone. Right? When we see this massive disruption push forward, we're going to see tens of thousands of real estate agents leave the business every single month. Hey, look at this. So when you look at the National Association of Realtors lawsuit in Texas, it says, look, Texas gets its own version, National Association of Realtors. 20 minutes ago, thousands of Houston home sellers may be affected by the antitrust lawsuit over real estate commissions. This is happening everywhere. And they say it's a $60 billion loss for property owners and home buyers. These real estate commissions, $60 billion. Now, many people would dive on that bandwagon and say, yeah, real estate agents, they're paid way too much and, it's unfair, they have a monopoly. But I would also say, possibly, but what about utility companies? Utility companies abuse Americans left, right, and center. They continue to jack up rates and enforce policies in which strip wealth from American consumers at a rate in which, we haven't seen in a very long time. 20 million American families, they can't keep current on their own utility bills, 20 million, right? So you start to see this, there's many monopolies in this country, right? Many monopolies. The real estate industry, sure, National Association of Realtors has a monopoly on the real estate transaction. But I would argue that this is just one of many monopolies that Americans are faced with. So when you look at what they're pushing forward on and the timeline in which they're looking to move into, this is happening, they're saying 2024, right? So in 60 days, we're in 2024. What it means for buyers and sellers. Eventually, the lawsuit may lead to changes in how real estate commissions are set and paid out. According to Cruz, the commission sharing model could evolve into a referral fee system. In my opinion, there will be something in the form of a referral fee from a listing agent to a buyer's agent and introducing the buyer to the property. Now, a referral fee is usually 20 points, right? 20%. So if, let's say it's $1 million property, then the listing agent, let's just say, got 2.5%, right? They got 25 grand, and they're given 20%. So maybe that other that realtor steps in, maybe they make 5 grand, right? After they pay the Coldwell Bankers of the world, the Keller Williams of the world, maybe that 5 grand they pay 30% over there. Maybe that 5 grand goes to $3,500. Then they have to break off Uncle Sam. Then they have MLS dues, and they have all these other expenses. What are they walking away with, 2 grand for that real estate transaction? Showed a home buyer 30 homes. They're going to spend more in gas, right? That's not going to work. A referral fee platform is not going to work. The buyer's agent is in very, very, very big trouble as this thing moves forward. It could also mean an end to commission sharing altogether. A recent report from the consulting firm Keefe, Burnett, and Woods projects that this unbundling could occur as early as 2024. It could result in commission decreases as much as 2 percentage points or more. The new buzzword for real estate will be decoupling, says Sissy Lappin, a real estate agent and co-founder of Listing Door in Houston. The seller will pay the agent and the buyer will pay their fees. Well, how many buyers are going to be able to go pay a real estate agent? That equation is out. The average home buyer, first-time home buyer, puts 6% down. You think they're going to give half the down payment to a home buyer to show them a listing they found on Zillow themselves? No, that's not going to happen. So you might see flat fees of $500, $1,000, $2,000 maybe being paid by a buyer's agent, but you're not going to see 5-figure checks written from the median home buyer going to buy a $420,000 home. I could almost guarantee that. How the decoupling will play out is uncertain. Some experts say buyer's agents may resort to flat fees or hourly rates. Others say variable fees may be more fitting. How much are you going to pay someone hourly rate? What are you going to pay them? $50 an hour? $100 an hour? I don't think so. I don't think buyers are going to do that. They're not going to go pay somebody $100 an hour. They would go pay an attorney $150, $200 an hour to draft the paperwork before they would go pay $100 an hour to go see a property. They're going to spend what, $300, $200, or maybe $150 to go see a house? I don't think so. I don't see that happening. Now look at what's happened here though, so you can kind of see the chain of events unfolding for the real estate market. So right now they said already 60,000 real estate agents left the profession in the last 6 months. So that's January 1 to June 26th. So the first 6 months they already lost 60,000 agents. This is before the National Association of Realtors lawsuit. So you can imagine that even if it picked up the same velocity, maybe 120,000 agents gone, what is this going to mean for 2024? Because the easy money, the easy transactions are gone as well, right? We're going to see a race to the bottom. We're going to see more and more agents desperate to get a deal done, and they're going to start cutting commissions left, right, and center. I believe naturally they're going to start seeing commissions continue to fall. Like it did before, it went from 6% to 5% is the norm. It's going to go from 5% to 4%, and the race is going to continue. Desperate agents are going to do desperate things to get deals done. Now look at what's going on in New York. Manhattan real estate brokerages are sued for inflating commissions. This came out 3 days ago. So 3 days ago this came out, and what they're saying here is a lawsuit filed on Monday accusing the Real Estate Board of New York and more than 24 brokerages and companies conspiring to artificially inflate commissions paid to agents who help sell residential real estate in Manhattan. Their proposed class action against Brimney Trade Group, the Corcoran Group, Douglas Elliman, and others followed October 31st, and the verdict by a federal jury in Missouri awarded home sellers $1.78 billion in a similar case against the National Association of Realtors and several brokerages. So this is a lot bigger than just the real estate agents of the world. Look at, because there's 1.566 million real estate agents, right? But you have 441,000 mortgage brokers. You have 57,000 escrow officers. You have 23,000 title companies. And then you look at how a lot of contractors stay in business. They get referrals from buyer's agents. They get referrals from listing agents. I mean, everything is connected to a real estate agent when it comes to a real estate transaction. When you start to strip away the real estate agent, you're stripping away wealth from a lot of other industries. I believe just removing the real estate agent from the equation, removing the mortgage broker from the equation, you could see a complete devastating blow to the housing market in terms of increased inventory dramatically. A lot of these real estate agents are going to have to sell their properties, right? A lot of these agents are going to walk away from their properties. Mortgage lenders walking away from their properties. Title reps, escrow officers walking away from their properties. We're walking into massive disruption here. Massive disruption. What do you think about this entire situation? Drop below. We'll have a conversation about it. If you have plans to invest and take advantage of what I believe is going to be the greatest wealth transfer of all time, the better your credit score, the easier it will be to open doors to banks, both small and large, credit unions, credit card companies, and other lenders. You're going to want great credit. You're going to want to have a 780, 800 credit score. You're going to want to position yourself to where when you apply, they want to work with you. If you have a late payment, a charge-off, medical bill, repossession, foreclosure, bankruptcy, you have any issue on your credit report, book a free strategy session below at GreatCreditFast.com. We can see how we can help you, and catch you in the next video.